Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday, it's July 29th. This will be our chart lesson for today. And nice, easy uptrend today. There weren't a lot of entries, unfortunately, and we had the FOMC stuff, which you needed to be out during this. That's what this blue square is. Generally, I recommend that you not enter about an hour prior. Make sure you're flat about an hour prior. If you're managing a runner or something, you might take that runner into the last 15 or 20 minutes before the 1 o'clock announcement. That's 1 o'clock Central Standard Time, so you got to you got to convert that time to your time. But just be flat by 1 o'clock. Today was nothing unexpected. I mean, it's not. I would you could almost trade this today, but you still need to be out that hour. And you had a little bit of a move, but you can see even on an FOMC day, the price action holds. And notice what happens. We had a little bit of they run it down first and they fake everybody because there's people that trade this, and then look at it take off. And that's a pretty strong move considered what we'd had so far this morning. And notice what happens. Before too long, they come back and they reset right back to where it basically started, and it starts over again. And you'll see that over and over and over. Sometimes it comes back really quickly. Sometimes it takes a little longer. It took a little longer today because the trend was already up and the price action was still working. But notice we had that overshoot, which tells you don't buy down here. When you see this overshoot, don't buy down here. Even if you got a great second entry, wait. Make sure this plays out. And this was into 2 o'clock, so it didn't really matter today. Although a lot of times, if you get a good setup right at 2 o'clock, just a couple of minutes into it, you may take that trade. It needs to be real quickly, though. I wouldn't, once you get more than about 5 or 10 minutes into 2 o'clock, don't take any more trades. Generally, you're better off not to take any, from 2 o'clock on. But sometimes you'll see a really good setup just a minute or two into a 2 o'clock, and I'd be okay if you took one of those. So, but notice again, the price action takes off and overshoots. It gets a little overzealous here, and we get that break of this trend channel, and then prices reverse. It comes back basically to right where it started, and it resets and takes off again. And you'll see that over and over. So generally these moves, don't get married to these big moves, because even when they're 1 or 2 bars on a move like that, it'll take it back pretty quickly. So this was more of an ordered and structured move. It's not really too fast. It looks almost similar to the other price action, except it just keeps going a little further. And so, again, you could have traded this today. Nothing really out of the ordinary here. If you got a good second entry here and you didn't know it was FOMC day, you could have taken it. I probably wouldn't. I'd wait that box out just to be sure. But even right here, you can see this is pretty normal price action. So if you had a setup right here, I'm not against taking it, because you can see even in an FOMC announcement, the price action still works. And you get this overshoot, then a break of your channel, a couple legs up, and we corrected for a little bit, and we traded back up again. We're going to close, or actually we did close near the high today. So one other thing I want to tell you before we get to the trades, I talked yesterday, or talked a couple of times, about looking at some different charts. Make sure you understand that there's nothing wrong with the 2000 tick chart. It's still the preferred chart. The only reason I'm looking at another chart is because there's so many newbies that this thing is, with the volatility we've got, this thing moves so fast, and it's so many swings and ups and downs that somebody that's not a skilled chart reader will really struggle to read it. But you see how clear everything is on this chart. And if I put, here's the 6500 chart, which I think is a little better. I just don't think there's enough bars on the 10,000. I don't think it's the right chart. So, but you can see it looks very similar here, much slower, much easier to trade than the other chart. Obviously, you still don't see the details in the price action, but you can see enough details in here to take these trades. And there is a midline in here. I didn't put it on there, but So, but the point I'm trying to make is there's nothing wrong with a 2,000 tick chart. So we're not just looking to change charts or trying to change because we think something's wrong or something's changed with the 2,000 tick. It's still the preferred chart we want to trade. So the only reason we're looking at some other charts is just for some of the newbies, just to slow it down a little bit. So I think just what I've seen the last few days, if you want to look at something that's a little bit slower and a little bit easier to, I mean, today was an easy day regardless. I mean, you can see that EMA is straight up and most all your bars are above it. When we came back to the trend line and somebody was worried about taking a long into the EMA there, look, this is a strong trend. Once this trend line is proven, if you get a setup on it, you got to take it. Just take this. Just take the stinking trade. You know, don't try to talk yourself out of it by saying, hey, I can't trade into the EMA on a trend. This is a trend day, a strong trend. Look at that EMA pointing straight up, and look at that trend line. It holds all day long until after 2 o'clock. It takes till 2 o'clock this afternoon before we close outside it. And then there was a clear signal it was coming because we overshot it up here. That's a clear signal that, hey, we're probably fixing to get a break. Even if it doesn't happen on this move down, it'll probably swing back up to the midline or back up to the EMA and then turn down and break. So that's a clear sign that it's coming. And until then, there was no reason to do anything but buy if it came back to that trend line and gave you a setup. So make sure you understand those two things. And people try to, the other thing that people try to do is they get too narrowed in on just the rules. The rules are to help you keep you on the right side of the trade and to make sure you don't make mistakes. But you have to be able to read. We're chart readers. We're not pattern traders. We're not just looking for patterns. The pattern, we're looking for prices to come back to certain places, and then we look for the pattern to narrow down our entry. So we're price readers. We're chart readers. We're not pattern traders. You can't trade. There's no pattern that works consistently enough that you can make any money. Even the two-legged pullback second entry, as powerful as it is, you'll see a bunch of them that fail all over the chart if they're not in the right place and not in the right context. So make sure you understand that we're not pattern traders, and you can't memorize a pattern and go trade it. And yeah, you'll get some winners, but then you'll have a bunch of losers and give it all back. So you've got to learn to read this chart. This chart tells a story. Just like if I sat down and opened up a book written in Chinese, I couldn't read the story to you. But if I learn to read Chinese, I can open up the book and read Chinese story to you, or Russian, or Portuguese, or Spanish, or whatever. If you can't read the book, you don't have a clue what's going on in it. Somebody has to read it to you. Well, it's the same thing with this chart. It's a language and it speaks to you, but you have to be able to read it. And if you can't read it, it's just like looking at any other written language. It's just gibberish. It's just marks. It's just bars on a chart because you don't understand what's going on. So understand that your goal is to learn to read this chart. Your goal is not to find second entries or pullbacks to the EMA. Yeah, those work better than anything. As simple as those are, that's probably the most powerful pattern you could ever trade if you just want to if you're just going to trade patterns. But guess what? You're still going to have a lot of losers. If you want to be a real day trader that makes money consistently every day and makes a living at this, you got to learn to read this chart. That's the only way. There's no pattern. There's no software. There's no holy grail. I don't care what anybody tells you. I don't care what anybody shows you. If you know somebody and they're consistently making money every single day as a day trader, sure, they might have a losing trade here and there, but generally they're going to make money every day, then they can read this chart. I promise you. They may not call it chart reading. They may not even know they may not even have a name for it, but they're chart readers. They can read this chart. They understand price action and they understand what's going on. I'll make comments in the mid-morning chart that I post, and people say, well, how'd you know? How'd you know? Well, 20 years of learning to read this chart and the experience of this ES of trading just this market, you start to see things and learn things, and you learn to read the chart. That's how you know. It's nothing magic about it. It's nothing there's no holy grail to it. It's just learning to, it speaks, this chart speaks a language and you got to learn it. So that's 10 minutes. So I didn't mean to get on this soapbox, but it's just, we have so many new people and they just don't have a clue what we're even trying to learn here. They saw somewhere else, they saw these promises of easy $500 a day. There's no such thing. If you can read this chart, yeah, there's easy $500 a day to be made. But if you can't read this chart, it isn't easy. It's like trying to read any nine. It'd be like you picking up, let's say you're a native English speaker and you've never spoken Spanish or Russian or any of those. It'd be like you trying to pick up a book in Russian or Spanish and trying to read it. You're not going to have a clue. Even if you know some words, you're not going to be able to read that book. And if you don't understand this chart language, you can't read this chart. And if you can't read this chart, you're never going to make any money. So make sure you understand that. If you don't ever hear me say anything else, make sure you understand that if you can't read this chart, you'll never make it as a day trader. You will be a donator. Don't be that guy or gal. Don't be a donator. Because they need, I hate to see people come in and they're wanting to trade live, and I got people emailing me right now that are trading live and they don't have a clue. And I don't say that to hurt your feelings. I say that because I don't want to see you blow all your trading capital before you learn. People say it doesn't work. You can't learn on the simulator. Trust me, you got to learn on the simulator. Nobody watching this video, even if you're probably a millionaire, if you're watching this video, you don't have deep enough pockets to learn this trading live. Trust me on that. If you want to donate your $1 million to somebody else's ATM, then you be that person. But I don't want it to be on my, I don't want you to be because you learned something from me and I told you could do it, because I want you to know the truth. Most people aren't going to tell you the truth because they want to sell you something. Don't be a donator. If you're trading and you can't read this chart, you're a donator. I don't give a hoot what anybody tells you. I don't give a hoot how smart you are. I don't give a hoot if you got a 250 IQ. If you can't read this chart, some dummy with a 100 IQ that can read this chart will come in here and take your money like taking candy from a baby. Trust me. I see it every day. I've been doing this 20 plus years. I did it myself. I was a donator for a long time. Don't be a donator. Don't be that person. Okay, let's get to the chart lesson. All right, we're going to go our 2000 tick chart right here, and here we go. Look, we spiked up, went to a channel. Very similar to yesterday, except this is a real clear and strong trend. It was an FOMC day, so you had to be up. I forgot to post that originally on the mid-morning, so hopefully you saw the update and didn't get caught off guard. But you need to have your news guard on here. I think I have one now. I haven't tested it yet, but I think I have most of the NT8 indicators now. I'm pretty sure I have the one that puts the tick count right here by the bar, so I'll be putting that one up today for sure. And then there's a few more. I'm gonna try to test them, and if so, I'm gonna put them all in the member section, and they'll be free for download for any of our members, all of these. And so just kind of be watching out for that if you've been waiting on any of those. Honestly, I don't see any reason. If you like NT7, I mean, there's things I don't like about NT8. I've been playing with it and trying to get these indicators and trying to. I just don't like it. I mean, there's nothing it'll do that this won't do, that NT7 won't do, and that's the charts you see are all NT7, and there's nothing that NT8 will do that NT7 won't do. So I've asked some people why they prefer it, and they came up with some reasons, but to me, it just, it doesn't matter. I understand this software, it works well, I'm making money with it. Why would I want to change? Unless there's something that other software gives me this one doesn't, but there's not. So there's no reason to change. I'll probably still stick to NT7. Some point I might say, okay, I'm going to learn it and change, but I don't see any rush or reason to want to trade it. So, all right, we're going to still end up 30 minutes here, and I didn't even talk. We don't have but a few trades. So anyway, when I came in this morning, we were in this range. We traded up into it, so it's still got an upward bias. Notice what happens here. you got a new low, you get a first entry, and you run up here, and it looks like you're going to trade down, and it fails. So if it breaks higher here outside this, where most of the resistance, and really by that time it had kind of moved down, so it's coming back and testing it. So if it breaks higher here, it's probably going to trap people, and you can see how quick it rocketed up. It trapped people. And then you pull back with a second entry, and you get a little double. Notice we already tested that once, and we tested twice. So you could go long on that second entry. It looked like it was going to be an engulfing bar, but it didn't. But if you had your trade there, just a few minutes later it triggered. But then it pulls back and gives you a double test of this level. So you end up testing that. You make the low, you test it once, twice. That's a triple test, and it breaks lower. When it came back through on this side, you could have gone long one tick above this bar, but you could even wait right here. I mean, there's still plenty of room and go long right there. When you've tested it that many times, we're probably going higher. Off it goes. It pulls back. There's a second entry long right here, but this has been a little congestive. So I'd want to wait for it to get back to this trend line or a little double test or something. But notice it makes the low, then test it once, test it twice. And so when it broke above this bar right here, you could go long. It tries to give you a little repeat pattern here. Let me make that a little bigger. To me, this is pretty big, but I realize that sometimes you can't really see it. But it does break lower there, but it ends up being a relatively negative bar on my chart. But if you add a bullish bar right here, go long, because it's a repeat pattern of that. It's really already a repeat pattern here, but now you just get an extra chance. Runs up. It makes a failed second entry short here. But at this point, we haven't been pushing back up here. So I'd be a little leery about going long there. You could take that one. It should probably be at least green. Just take this one. It's easier to do it that way. So you could consider that one. You definitely don't want to be entering up here. It does come back here, but look how congestive that is. Just there's a little lower. There's actually a second entry long there, but it's an inside bar. That's a dough. It's just too congestive. Just wait. Pulls back here. Somebody went long right here. Don't go long on a first entry right there. Look, what prices do is they go between support and resistance. Support, resistance. Support. It goes back to resistance, support. That's what prices do. So once you've come off up here, notice that I couldn't get back because it's trying to come back here. The market was still a little strong here, but it still came back here. So be careful entering anywhere but right here after it's come off this resistance up here. Now, if you get a really good second entry and it's been bouncing off that midline a few times, which it did bounce there, it did bounce there. So if you get a second entry here that's a good trade, you could go long there. But make sure it's tested that a few times or wait for it to come back here. This is where this is the key entry point. These are, in a trend like this, the EMA and the midline are minor key entry points. So I want to make sure that's clear because maybe I haven't clarified that. These are key entry points, but in a trend like this where the trend line's way down here, these are minor key entry points. They're not as important as this one. This is the king daddy of all of them right here. This is where you want your setup to happen first. That's where the best trades are going to happen. Anything that happens up here is like being in the middle of a trading range. It's not quite the same because second entries are still important because you're not really just going sideways, you're still trending. So, but it's still similar to being in the middle of a trading range. Be careful. So you don't want to enter on a first entry. I don't give a hoot how good your bar looks. Don't enter on a first entry after it just came off the resistance up here. Wait on a second entry, which comes here, and you can see my chart is too bearish. Yeah, it still works, but I don't care. That doesn't bother me. I followed the rules. I didn't have a loser because next time you try to do it, it'll tick up and turn straight down because we're expecting prices to come back here. So if I don't get a perfect setup in the midline and have bounced there a couple of times, I'm not taking it. So notice it doesn't get back up there and it comes back. you could count that as a second entry, but I treat that like one leg. So there's your first entry, and mine didn't break lower there, but those are two matching lows. So, and look how bullish that is, and you're bouncing off the key entry point. You could treat that. You could go long there if you want it. It's not a perfect setup. If you're not a good chart reader, don't take that trade. But if you understand what's going on there, notice that prices tried to go lower again, and the trend line's just too strong, and the trend's too strong. So we just came off the support. So if you got a reason to, but you can't take that trade, but maybe you take that one. It's not ideal. It's not. So I'd tell you, if you're not a great chart reader, don't take it. But then notice prices come. This is kind of a repeat pattern. Notice we push through the midline, pull back and test it. That trend line still in play. If it breaks higher, we're probably going higher. And so you could go long right there. And it's a repeat. Notice when we came up here, we did the same thing. We did it back here. Several times we pushed through there. And I think we do it again a little bit later. So it's kind of a repeat pattern. And then you come up here, you still hadn't got up there, but you just came off the low. So prices are going to try to go up here. Don't try to short this, because if you do, you get burned. Stay with the trend. But notice you get a first entry, and then you get a second entry. Again, I got a very bearish bar. That's an inside bar. Just wait, and then you come back, and you get a first entry, and unfortunately, you don't get a second entry here. It comes back again. And literally that's two legs back though, and this broke lower, and I guarantee you, oh, of course this is in 1 o'clock, so we're not taking these trades, but this is something, if this was not going on here, I would treat that like two legs back, and when this broke lower and turned up, I'd go long right there. I don't have a problem with it. You're better to wait on the higher low, but again, I don't get a very good signal bar. But then you get that little repeat pattern on a failed second entry short that breaks lower right here and turns and goes out. And if it breaks above all those matching highs, it's going to shoot up, and look at it go. Because you got all these top pickers, and you got all these people that probably got short right here on this FOMC news, thinking, because there's people that teach you to trade the news. Whichever way it goes, jump in. There's probably some of you watching, that's what you did. And you just got burned right there, when all you had to do was read the chart, find this channel, and trade the trend line. But you get that failure, and there's that repeat. We saw it here. It's similar here. It's not quite the same. We saw it here. Saw it here, but it's kind of a repeat pattern. We run up here and push through the EMA, pull back, and then go higher. And you don't want to enter up here into this resistance. I don't care how good of setup you get. Don't take it. It works, but next time it won't. Trust me. And really all that probably helped it was this news item. That's a lot of hard selling right there. So once we start going higher, somebody's got to exit. It runs up, and you try to go higher once, you try to go higher twice. So that's a failed second entry long, way away from the EMA. Look how far back it is. So I like going, that's the one time you might go short. It's still aggressive because this is an uptrend. So for most of you, probably don't want to take that trade. But if you can read this chart, like I talked about for 10 minutes earlier, if you understand price action, you can read this chart, then you might take that trade. Because that's congestion too, but it's congestive because what's happening is we're running out of momentum here, but there's still some weak buyers that don't know any better coming in, and you just really are in equilibrium there. Nobody's winning. So that's what that's telling you, is that, hey, the momentum's running out. We're way overdue to come back to the EMA. We overshot the trend channel line. We're way overdue to come back to the trend line. This thing's probably fixing to sell off. Now, it's a timing thing. So you wouldn't want to take a lower high, but if you get this trap on that failed second entry long, then they've tried 3 times, and you really kind of get a double test of that high right there. Notice we made it, then we tested it once, we tested it twice. That's when you might go short. And that takes you into 2 o'clock. Here's a little lower high, but again, even if this was before 2, I wouldn't go short there because we're probably going to get a break, but you don't short a strong uptrend like this. I wouldn't even take that trade. I wouldn't even mark that one green even if we were at 1 o'clock or at 10 a.m. because you don't go short into a trend line that looks like that's been holding all day. Yeah, it works, but next time you try it, it'll fail and turn up again, and you see it doesn't go far before it does turn up. So you just don't take a short like that. They're too risky. So anyway, what was going to be a quick, easy chart lesson is 20 or over 25, going into 26 minutes now. But hopefully you learned something today. Hopefully you heard something today. If you didn't learn anything, hopefully you heard something important, because everything I talked about early on was important. And I'm not going to get back on that soapbox. I'm going to wrap it up. I'm going to close it up for the day. We'll be back again to do it tomorrow and wrap up our week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.